Every financial story teaches something. Today's story begins with Denise Okafor. Denise had never missed a payment in her life. Not once, not ever, on anything. So when her credit score dropped nearly 40 points in a single month, her first thought wasn't confusion. It was suspicion. She assumed someone had opened something fraudulent in her name. Denise had spent the weekend cleaning up her finances. One of the things on her list was an old store credit card she hadn't used in years, sitting open with a $5,000 limit and a zero balance. It felt like clutter. She called and closed it. A few weeks later, her score had dropped. She checked her credit report first, the way she'd learned to. No new accounts, no missed payments, no fraud. The only thing that had changed was the account she'd closed herself. And that's worth pausing on, because it's the part of credit scoring almost nobody explains clearly. Closing a card doesn't erase your balances. It only shrinks your available credit. Denise's total spending hadn't changed, but her credit utilization ratio, the percentage of her available credit she was actually using, had jumped because the denominator had just gotten smaller. On top of that, she'd lost the age of one of her oldest accounts, which had been quietly helping her average credit history look longer than it was. None of that showed up anywhere as a mistake. It was simply how the math worked. Denise didn't need to reopen the account. That's usually not possible anyway. What she needed to understand was the mechanism, so the next decision she made about her credit wouldn't quietly undo the discipline of years of on-time payments. She learned two other things worth remembering. A single credit inquiry from applying for one new card or loan typically costs only a few points and recovers within months, but several inquiries in a short window for different types of credit can compound in a way that looks, to a lender, like financial distress, even if nothing is actually wrong. Denise's score recovered gradually over the following months, mostly on its own, as her utilization ratio settled and the closed account's history slowly aged out of the calculation instead of dropping out abruptly. What stayed with her was simple. She had done everything right, for years, and one tidy decision on a Saturday afternoon still moved the number. A credit score isn't just a reward for paying on time. It's a live calculation, utilization, age, inquiries, all shifting together. And understanding the mechanism is the only way to stop being surprised by it. Financial protection rarely begins with money. It begins with knowledge. I'm Daniel Brooks. This is American Financial Stories. Knowledge is your first line of financial protection,